Hello and welcome to Gold and Silver Assets. It's Sunday the 29th of November 2020. A couple of viewers brought up some very interesting points about digital currencies and their potential to hurt gold investors. This is quite a complex topic because there are so many moving parts, and I'm still pondering the many aspects of this, but here are my thoughts so far. Here I'm purely talking about central bank digital currencies, and I do consider this to be different from cryptocurrencies. They're not the same. This is a digital form of fiat currency that is on a blockchain platform that's totally centralized and issued by the state. It would be legal tender and there would be no physical version. The first question is, how likely is it that central bank digital currencies are brought in? Well, I assign this to be a high probability event. From this map over here, we can see that 80% of the world's central banks are either engaged in research or experimentation in digital currencies. For example, in Shenzhen in China, there's currently a pilot program going on with 2 million citizens using digital currencies. The areas shown in red on these maps show where retail pilots have actually been completed. There are three possible ways that a digital currency could be administered. One is that the government could directly manage all payments and administration, including things like KYC and AML. But that would involve a lot of extra work and infrastructure. Alternatively, the private sector, such as banks, could get involved as intermediaries to take on those tasks. Or alternatively, there could be a hybrid system of the two. Of course, it would be crucial for the public to be on board, and I think these are what the selling points would be. It would be much more convenient and easy to use, so no need to carry heavy notes and coins around or multiple cards in your wallets. Transactions will be much faster and a lot cheaper, and it will improve financial inclusion since there will be no need to have a traditional bank account. It will also be easier for the government to give currency directly to the public, almost instantaneously, when they decide to do helicopter drops. What's not to like about all of that? Of course, governments will have their own incentives for introducing digital currencies. Being just another form of fiat currency, it won't be backed by anything, and so it could be produced in unlimited quantities with just the touch of a button. Digital currencies will also make cash hoarding and bank runs a thing of the past. It will also make it much easier to introduce things like negative interest rates. It will also be potentially easier to stimulate inflation, which is something that central banks have been trying to do for a while now. If people are told that their digital currency balance will shrink or even be taken away at the end of each month, then that's a sure incentive to get people to spend. But wait, there's more. Every single transaction will be on a centralized blockchain ledger and can be easily tracked. That will mean that the government will be the proud owner of a huge amount of valuable and sensitive data. Because digital wallets will be centrally administered, that means that any individual's transactions can be blocked or controlled at will. Being on the blockchain means that currency smart contracts could be introduced, and that has quite a number of implications, which I still need to think through that a little bit more, but my initial thoughts are that not only could transactions be controlled through smart contracts, but perhaps also the value could be controlled. What if a currency could be programmed to increase in value if used to purchase certain goods or spent in a certain sector? I see two major weak points for digital currencies that could lead to their downfall. A centralised system could potentially be hacked, which of course would be disastrous for a country. But another big one is electricity dependence. If there's no electricity, then there's no digital currency transactions. The grid could go down for a number of reasons, including weather, a solar flare, or an electromagnetic pulse attack. And if any of that happens, let's face it, the currency will be the least of the problems there. I recently read a book called 1 Second After, which is a fiction book that discusses the aftermath of an EMP attack on eastern USA. And it's a really fascinating read, and I found it a real eye-opener about just how dependent we are on electricity, and it came up with some things that I hadn't actually thought about before. Anyway, it's a really good book. I've put the link in the description for any of those interested. What effect would digital currencies have on gold? Now, I don't know for sure. Here are some of my ideas about how it could affect gold investors. It could allow restrictions to be set on buying and selling physical gold by retail investors. It might make manipulation of the gold price easier. I'm not sure about the mechanism, but it's a possibility. Perhaps they might value adjust the currency downwards for gold purchases. Variable taxation would be easier to introduce. For example, the percentage tax could increase with higher volumes of gold purchases or selling by an individual. And since cash would be gone, there'd be no need to keep gold and silver coins in the category of legal tender status. Perhaps the mechanics of accessing funds after selling offshore gold will be hindered. These are just a few ideas and speculations. If you can think of others or even why some of these are wrong, then let us know in the comments. Would a digital currency be successful? Well, I think that the most important factor will be how well accepted and credible the new currency is. There are a few aspects that I'd want to look at in a lot more detail when considering this in future shows. One is, has it actually worked before? And also, what effect does this all have on the existing huge debt pile? Also, what would be the impact if the world's reserve currency was replaced by a digital fiat currency? We know that for centuries, every single world fiat currency has been replaced by a gold-backed currency. Would the world have confidence in a new digital dollar in the same way that it has confidence in the current US dollar? Overall, I think when it comes to currencies, it's all about confidence. If the majority have confidence in the central bank digital currencies, then yes, there is potential for the gold price to suffer. Having said that, fiat currencies are not everlasting, and there are multiple examples in history where replacing one fiat currency with a new one just didn't work. Fiat currencies can become worthless overnight, but gold has always been accepted as money. Next up, the market update. Well, what an interesting week we've had. So there's quite a bit to talk about. Let's start with the US dollar index, that's the DXY, and this is the chart shown on the monthly scale. And quite a while ago we had drawn this trend line by joining these two lows over here, and we were watching closely to see if this would break. And initially it was providing a reasonable amount of support, but now it has broken, and it has closed below that trend line on the monthly, weekly and daily scales, and therefore I would consider that to be significant. Of course, these things are never 100%. Sometimes you do get fake out breakouts, but looking at it, that's quite a strong red candle. If it had a wick, then I'd be a bit more suspicious. But to me, that looks like it's broken out. And this is quite a big long-term pattern that we're looking at. So I think there's more downside to come. Where is this going to go? Well, if we look back here, we do have some resistance over there and support over here. So we're looking at around 88. And what can often happen here is that after the initial drop, you can get a retest of the underside of that trend line. So that is a possibility there, but not always. Sometimes it just drops right through there. And then, of course, the next support level will be over here at 84 because that acted as resistance earlier on. So interesting. I wasn't convinced that that would break, but in fact it has. So I think we do have to take that seriously, particularly since this is a very, very long-term trend line. Okay, let's move on to our favourite topic, gold. Now, this is the chart that we had looked at in the show about explosive price moves, and I think it was in the market report before that. And we had drawn these lines using polynomial regressions, and it was drawn to join the mean of the lows. And we'd drawn it early on and basically tried to extend that based on the polynomial equations. And that was aimed at giving us an idea of where the lows would be. And this is very, very interesting because if you look over here, we've just hit that point over here on this chart. Now, if we look back at the previous bull market, you can see that early on it actually worked pretty well. But as we got further and further into the bull market, it wasn't so useful. And so that's why I'm using this at the moment, just because I still think we're in those early stages. But later on, I think that actually price will move potentially much steeper, as we discussed in that previous video there. And so we'll have to look at ways of making that a bit more reliable. But at the moment, I think this is looking pretty good. And actually, when I zoomed in looking at the exact same chart on the daily scale, so this is that curve blue line shown over here. And when I looked back at this today, because I haven't looked at it for a while since we did that video, I was pretty gobsmacked because it's actually hit it pretty much to the tick over here and bounced off of that. So I'm pretty happy with that. I think that's going to be a useful line. And this suggests that we are at or close to a low in gold. Now, remember from the previous chart, sometimes it can dip below that, but to me, this doesn't look like a reversal pattern. I don't think we're going to go into a bear market. Any dip below this is going to be very, very temporary. It will just be a spike below if it even happens. Let's go back to our other chart. And so again, this is gold price in US dollars, but on the daily scale. And this was the upper trend line that we've drawn now. And here is that resistance zone that is long standing going back to 2012, and this was our target area. And it's amazing, it took long enough to get there, and that's another reason, is that this correction has been going on for quite some time now, and actually I think it's been relatively gentle, which again to me suggests that this is a correction rather than a reversal pattern. A few other things. So here in the RSI, we're peeking into the oversold territory here as well, and we've hit and actually dropped below that 200-day moving average. I think I'm going to call it. I think that the bottom is here. Okay, so well, let's see if that's true. What's going to happen from here? If that is the case, then we're not going to go straight up from here. Okay, let's be clear about that. It's not going to go above 2000, in the next couple of weeks. I think we've got a little bit of movement, a sideways movement coming up, but I'm going to expect it to be kind of drifting upwards rather than downwards now. Anyway, let's see what happens, but that's just my feeling. Interestingly, if you remember, some of you back in August in one of the market reports, I was talking about the New Zealand dollar price of gold. And at the time, I think it was coming up towards 3,000 New Zealand dollars. And I was talking about it going down to about 2,600 New Zealand dollars. And actually, it's surpassed that now. It's gone below that. And it's 2,540-ish dollars, which I think is going to be a good buy. So for me, I think that's probably close to as low as it's going to get in New Zealand dollars. So I'm a buyer at those levels. Anyway, let's move on to silver priced in US dollars on the daily scale. And again, very, very interesting price action. We had drawn this trend line here, joining these two lows. And I had said that if that breaks, then I think there's a fair amount of downside to go. Now, it hasn't been particularly violent, but it has dropped more than gold dropped. But the interesting thing is that where gold has actually dropped below its 200-day moving average, silver hasn't. It's still far above it, which makes me think there's further downside to come. And I was thinking about how low that this can go. And for me, what I've done here is join these two lows. And I think that is the most likely low that we're going to get in silver if we get a further drop. Now, I'm not sure that we will get a further drop. It's hard to say at the moment. But I don't know, I've got a feeling that we might, because also that's the other thing, is that it'll come up and meet this 200-day moving average. The other thing is that if this trend line is correct and this upper trend line looks pretty good as well, then we're looking at a descending wedge, which is a bullish pattern. And if that's the case, then what we're looking at is price coming down to here, and then it'll probably make its way up. I don't know the exact route it will take, but make its way up. And I'm expecting this breakout to occur before the new year. That's just an estimate. I don't know for sure. But when it breaks out from here, then we've got more upwards moves to come. But we do have resistance at 26, 28, and then, of course, the big one, 30 there. But because this is such a bullish pattern, there is a reasonable chance that we can break through that overhead resistance. Could it go lower than this? So if you want to look more closely at these trend lines, I've actually put them up on the Gold and Silver Assets website. So the trading view charts there are actually interactive. And so you can actually hover over the trend line and see what price it is. Obviously, if I tell you a price now, it can change if it takes longer to get there. And so that might be helpful to you. So I've got a range of charts up there if you want to see. And as things occur, I do update them sometimes during the week. Okay, so now if this low is incorrect and it does break, I think the absolute low is this red line here, because that's a very, very long-term line of support and resistance there. And I think I'd be very, very surprised if it dropped below that now. So I think the highest probability is here, which is roughly $20.80, I think. And I think there's a lower probability that it's going to go below that. Okay, and let's move on to the GDX. Now, this is an interesting one because although gold dropped a reasonable amount, the miners actually went up. I don't know whether that's just because it was quite a thin trading day with the holidays in the USA and so on, and so we may see the after effects of that on Monday. That'll be an interesting thing to watch. But with the miners, we've been in this downsloping channel for a while now, and a few days ago it broke below that. To me, this looks like it's going up for a retest before one final kind of drop, I think. But it's hard to know. I think we're getting to the point where things are on sale, and you don't want to leave it too late, because when this turns around, it's going to turn around big time. So you don't want to miss it in the hope of getting the absolute bottom. This line here, I've made it 31.29 just because it's joining all of these lows here and even further back. I think previously I had it at 32, but I'm just kind of fine tuning it. So that's probably going to be the best support. Now, sometimes these things don't always work 100%. So if it does poke below that, that's super bargain territory. Now, it could do that because remember that if we've got a breakout from this channel, then we would expect a target equivalent to the height of this channel, which will bring us to around 27 level. So that is a possibility, but I think it would be short-lived. I don't think we're going to be languishing down below this red line for very long at all. It will be very brief. So we're getting into shopping time. Fun. And finally, let's look at the silver junior miners. And again, I've called this a downsloping channel, and I've drawn this by joining those highs there, cloning that line and moving it down, and that fits with this low over here. And interestingly, that coincides with this 200-day moving average, as well as the lower trend line, as well as a region of support, and that's around the 12 region over here. So I think for me, that is a drop to that level is a possibility. At the moment, it does seem to be supported over here though, so don't bank on it dropping down to there. Again, with these miners, when they take off, they really do take off. And when we do get this turnaround, I'd expect either from here or probably more likely based on the silver price as well, a drop down to here and then turn around, and sometimes it might have a dip before it breaks out there, or it could just go straight up. But I think that's going to be a big leg up there. Okay, well, yes, that's been a very interesting week. Talking about the dependence on electricity technology that we were discussing a little bit earlier. The other day I was reversing my car into our carport, and of course I was just waiting to hear that beep to tell me when to stop. But the first thing I heard was a thud, and actually I think my parking sensors have actually conked out. But that just shows the dependence that we have. So my brain has been wired to listen out for the beep in order to press on the brakes when I'm reversing into that carport. And I've been doing it for years. And of course, I've stopped actually looking and, assessing it myself. So I'm going to have to rewire my brain so that I don't rely on that. Either that or I'm going to have to get a new car. Anyway, my car's quite ancient. It's about 14 years old now, and things are starting to conk out. But I'm not keen on getting a new car, but I guess I'm going to have to. Anyway, don't worry, there were no dents in the car, but the pre-existing scratches have got some new friends to join in with it. Anyway, that's it from me for this week. All the best, and see you next week. Bye.